Hello traders, this is Frank Paul from Forex Mentor speaking with you on Saturday, March 9th, 2013. I'd like to welcome you to this latest weekend complimentary video presentation. I've been using this slot in recent weeks to focus on the COT Market Watch service, which was launched a little over a month ago. So it's been a while since we've looked at a trade example featuring the FXM Trend Trader methodology, but I thought it's high time that we shine the light back on this particular service offering and the methodology it employs. Now, if you've ever looked at us before, or if you've even been a member before but maybe let your membership lapse, I thought I'd let you know that we are presently hard at work on a couple of subtle but important rule refinements which will most definitely improve the hit rate and also the ease of application of our method, addressing a couple of known issues. The most important one of which is the fact that the MACD histogram metric that we use in a 3-chart configuration has previously incorporated the daily time frame, and what we have found over time is that that really unfortunately keeps us out of way too many otherwise good trade setups, because it has proven to be the case that the daily chart histogram really lags badly the action on the lower time frames. Not always, but often enough that it's become a real nuisance, quite frankly. And so our plan right now is that with the EA update for the month of April, which of course will be available April 1st, the daily chart requirement will be gone. Now already you can bypass that issue. We have a switch in our EA tool called drill down, which basically shifts the 3 time frame screening result that we're looking for from daily 4-hour, 1-hour to instead 4-hour, 1-hour, 15-minute charts. So we're going to bypass that issue starting in April altogether, although realistically you can work with that right now with your own manual trading or using the drill down feature in the EA tool. And at the same time, we are going to make some important tweaks to the momentum matrix real-time opportunity identification tool, adding in a simpler metric for daily chart trend, again focusing our so-called 3M trend reading on the 3 time frames I just mentioned, 4-hour and lower, and simplifying our trade entry rules. So those are all improvements that we're working on right now, and I'm looking forward to announcing that they are fully implemented by no later than April 1st. So that's coming down the pike. In the meantime, the methodology is not going to change. What it involves here is using the 3-screen MACD histogram slope reading, whereby we look at the last 2 MACD histogram bars, and if they're sloping down, and doing that concurrently on 3 consecutive time frames, we have a bearish momentum reading, and of course if they're sloping up on 3 consecutive time frames, we have a bullish reading. Now that doesn't tell you there's a trade, it just says, look here, we've got strong momentum, take a closer look. And we have a real-time matrix display that helps you find those scenarios across a sample of 25 different forex pairs, and I might just bring up that tool in a moment to let you take a look at it just so you're aware of it. So that can help you anytime, round the clock, 24 hours a day from market open to market close. But again, that's just the equivalent more or less of, people use the term heat map. I don't like that term myself, but it's the basic idea. We're just trying to draw your attention to pairs that show that consistent momentum reading. But the most important, crucially important thing you can do with that information is then corroborate that it is potentially tradable by looking at market flow. Now, market flow is a hard thing to teach, but once you understand it, it's a very simple thing to see and to confirm. It doesn't take a lot of fancy measurements or detailed analytics or academic theories. You're just basically looking for clear evidence of a progression of higher highs and lows or lower lows and highs. And if you see that anywhere on the 4-hour, 1-hour, or as soon will be the case 15-minute charts, then that's all you need to say, yeah, okay, good, we have that green light to proceed further. And what we do then is look to the 5-minute and 1-minute charts. Now this paradigm that we've been using again will be simplified such that when we have the kind of paired moving average crossover that we're looking for, Whether it happens on the 5-minute chart first or the 1-minute chart, we'll take it wherever we get it. Previously, we were relying on a strictly sequenced progression where we had a 5-minute validation signal and then drill down to the 1-minute chart. Now, as it turns out, today's chart illustration will show you a situation where that worked just fine. But the point here is that going forward, we're going to relax the rules here a little bit, make it a little simpler to apply. And hopefully that will enable more good quality trades as well. Then we execute the trade and manage it according to the very clearly delineated rules that we've specified in our foundation course. Again, we have an EA semi-automation tool. It's not a robot. I cannot stress that strongly enough. Our philosophy is that robots can't possibly work optimally because they just do not have the capacity to read market flow and structure. That is a strictly human interpretive component that must be present in every trade decision, and I don't believe that robots can do that. But our EA tool semi-automates the process in that when you have found a continuation setup, such as the ones we published every day in our daily market flow PDF report, which is available for members, or your own, when you have found that 3M slope reading and you don't want to hang around for a couple of hours waiting for a 1-minute crossover signal, you just flip the switch on the bias, short or long. We also have a zero bias, which means either way, but we don't recommend that for trading purposes. You should only trade one side of the market at any given time for a trend trade, not both. But in any event, you flip the bias switch, you flip the activation switch, which in turn allows the EA tool to look for the specific combination of sequenced signals, which will get you into the trade, and then it takes care of the rest. Our methodology defaults to a 4-part scaling out approach, which I think makes a lot of sense, but you might not like it. You might prefer an all or nothing approach. If that's the case, then you can certainly pursue the trade that way, whether manually or adjusting certain switches in the EA tool. All of that said, I'd like to now set up today's chart example, focusing on pound US with a short bias March 6th, that's Wednesday of this past week, with a 1-minute entry signal, very well timed, very low risk at 7:28 GMT, just around about the London Open there. Entry price 151.26. I'm not factoring in dealing spread. That issue made no difference to the outcome. 20 pips stop at 151.46 for risk of 20 pips. And I'm happy to say the trade worked out really, really well. And it's not just that we had some signals that came along, and if you grabbed it, great. If you missed it, too bad. We were totally anticipating this trade because our daily market flow report for the day prior suggested a continuation move, which is exactly what we got, and I'll show that to you and prove it to you in just a minute. In any event, the scalp leg it's not really a scalp, it's a small day trade, but we're looking for 30 pips, which was achieved at 1.5096, where we look to trail to stop to break even. A day trade leg, 96 pips at 1.5030. A swing trade leg where we take 2 times the 5-day average daily range, or ADR, in relation to the high on the day in which the trade was executed. Subtract 2 times ADR from that high to give us a swing trade target, which was achieved at 1.4905. And then we carry the position trade leg of the order open using a daily chart 3-bar trailing stop technique to trail the stop lower and lower as price moves in the expected direction. So I'd like to walk you through now what the chart setup looked like, addressing some of the salient features of our trading methodology. Before we do that, again, I'd like to pull up the market flow report, which was published for our members the day prior, that is Tuesday, March 5th. Here is the now archived daily market flow PDF report. As you can see from the date stamp on the title page, that's Tuesday, March 5th. And I'm just going to scroll through until we reach the page for pound US. And that looked like so. And I hope it's fairly self-evident what we were expecting here. This is a downtrend continuation pattern with an already very well-established downtrend on the daily chart. You can see this 60-minute chart extract had a bias of pending short, which just means that within the next 24 to 48 hours, we're looking very closely for an opportunity to sell a low-level rally. And so the swing point C right here, very, very steep 88.6% Fibonacci. I know for a lot of people who have a passing interest in Fibonacci, you may not have heard of that ratio before. It's not widely quoted, but it is derived from Fibonacci math. If you have any questions about that, I can share the mechanics of it with you. It is real. It is valid, and I've seen that retracement level numerous times to know that it is such. So anyway, it was almost 100% retracement, not quite, but culminating in a swing point high around about 1.519697, just a little 1 or 2 pips above that level. And then the swing point high, price falling off, nice Heikin-Ashi shaved top bars, suggesting that we were in the early stages of a downtrend continuation. And the commentary for this particular day, as noted to the right, again, I'm not making this up after the fact. It is now posted in our archive area. You can pull it up at your leisure. Our members did see this in real time. It said, an imminent daily swing point low for March 1st at 1.4986 suggests the possibility of a much larger upside retracement getting underway against the daily chart leg down from January 1st at 1.5875. But the first priority would be to call a corrective top on the 60-minute swing point high at 1.5195, with price now waving lower en route to lower lows ahead. So as it turns out, we sounded a cautionary note about a pattern on the daily chart which was worth being mindful of, but as the commentary here I think made pretty clear, both the written commentary and the chart annotations, what we were really looking for was a downtrend continuation. Okay, so that's what the PDF report looked like. I think it was pretty clear in its implications. Within the next 24 hours, we'd be looking for a short opportunity. That's sort of late in the day on Tuesday, March 5th, when that's made available. So let's take a look now at the charts for cable. And I'm just going to get the right cursor option selected here. Okay, so weekly chart, well, there's not much left to the imagination here, eh? Going back to January 21st, we have pretty much an uninterrupted progression of Heikin-Ashi shaved top bars. Now, Heikin-Ashi is not an integral component of our trading methodology. I just use it because I like seeing that sort of built-in momentum indicator. Pointing us down, down, and down, and the most significant breakout was through this triple bottom that we had going back to October 3rd, 2011 at 152.72. When price broke that floor, that was pretty darn bearish, even though we had reason to believe a downtrend was underway already. And bar by bar, looking at the MACD histogram here, as you can see at bottom, we have bearish 2-bar slope readings. So in other words, let's say we go to here, January 21st, the very next week, January 28th, was a lower histogram bar, and so that's a bearish reading still intact as of February 4th. You look backwards from February 4th and see a downslope on the 2 latest bars. So that's bearish on the weekly chart. And on the daily chart, let's just draw in March 5th. And whoops, sorry about that. What you can see is what we were glomming onto here is that we had an imminent swing point low on the daily chart. That's about all we had, and it reversed eventually downward. So we were mindful of this thing, but a swing point on the daily chart, that's not enough. You really have to see evidence of bullish market flow to suggest a turnaround, and we didn't see that. We saw the exact opposite, as I just noted on the 60-minute chart. We had a prime downtrend continuation pattern. So we were able to sort of hold our nose at this thing and say, yeah, okay, it's a swing point, but is it a significant one? Probably not. Now, this daily chart also shows you the known issue, for lack of a better term, that the daily chart histogram into right here, February 5th, was actually bullish, and that demonstrates the counter trend lagging effect that unfortunately is all too often the case. In fact, it goes back to right here, February 27th. Not huge down moves over that 4-day period, but certainly tradable. We had some short opportunity through here. So the largely upward slope on the daily histogram really lagged the action even into today. And to address that issue is very simple. We're getting rid of that part of the whole metric. We're removing the daily chart histogram. It's just unfortunately far too often an unnecessarily lagging effect, which keeps us out of too many good trades. And it's not problematic because if we apply the so-called 3M concept on the next 3 lower time frames, it works much better. But in any event, that's what we were looking at on March 5th, just in relation to that quote about a swing point low. Okay, and then into March 6th, midnight GMT, we still see bearish market flow, but it simply replicates what we already pointed out on the 60-minute chart. So we had a leg down from here, February 28th to here, March 1st, a fresh low, then a retracement, a really steep one, but nonetheless a swing point high confirmed by the time we get to midnight GMT. And this is where you can see the proper 2-bar slope reading kicking in here. Bar by bar, you can see the 4-hour MACD histogram waving lower and lower, which is what we're looking for. And then let's pull up the hourly chart. And this is pretty much that same retracement. I'd gotten rid of it previously. Okay, our A right here, 1 p.m. GMT the 28th at 152.22. Our B, an interim low into a retracement from here, 3 p.m. GMT on March 1st at 149.86. Price blasted through the usual Fibonacci target zone, gave us this swing point C high for 9 a.m. on the 5th. And then I suggested that a little wave down already in progress ought to give way to a retracement. And I'm not going to claim any special prescience here. It was just fortunate that coincidentally the market just happened to time exactly for that kind of a move. Okay, on the hourly chart on the previous day's PDF, we drew a down arrow, and then we drew an up arrow to suggest look out for a retracement. And coincidentally, that's exactly what happened at exactly that point in time. Just a coincidence, nothing more. But it's what we were looking for to enable a next larger leg down, which is exactly what happened. And so we're looking for that bearish 2-bar histogram slope reading into 7 a.m. GMT, and we've definitely got it right here. If you look very closely, there's a low for 5 a.m. There's a lower low for 6 a.m. That's bearish on the hourly chart when we get to right here. And then I'll just quickly flip into 15-minute chart mode, and I'll ask that you just bear with me as I find the appropriate spot. I'm once again drawing a dashed vertical line through 7 a.m. GMT March 6th, and you can see we have the bearish histogram slope on this time frame as well. So those bearish slope readings, whether the histogram bars are above the zero line or below, doesn't matter. All that matters is they're waving lower. Lining up the way they did on the 4-hour, 1-hour, 15-minute charts in the direct aftermath of a downtrend continuation setup, that tells you, hey, take a close look at this, okay, because we might be on the cusp of a down move here. Now, I suggested a moment ago I would bring up the momentum matrix, and I'll do that if you can just bear with me for half a second here just to show you what it looks like. And here it is. As it stands today, we've got the 5-day ADR to show you the daily range, which is an appropriate guide to tradable potential because you don't want to spend too much time on a pair like CAD Swiss, which has got a 5-day ADR of 40 pips. That's just untradeable. But a pair that's showing 80, 90, 100 pips average daily range, that's good. So as it stands right now, our so-called 3M timeframes, M for momentum, comprising a grid of the daily 4-hour, 60-minute charts. Again, we're going to simply delete the daily column and then shoot this thing down to the next lower grouping of 3 timeframes instead, 4-hour, 60-minute, 15-minute charts. And then the execution timeframes will light up when you have a so-called triple screen or 3M reading, which is the same up or down reading across all 3 timeframes based on the latest 2-bar histogram slope, and then we have a signal log as well. So this will provide a useful real-time guide to direct your attention to potential tradables. Anyway, back to the chart here. So as of 7 a.m. GMT, we're looking for a trade entry signal. And I'm going to just go back in time here now on the 1-minute chart. And I'm way off on my timing here. Let's just find March 6th. There we go. And so what we're specifically looking for, by way of this configuration of a 10 and 20 paired EMA is we're looking for a counter trend reading after the momentum reading is in place on the 3 higher time frames. We're looking for a specifically counter trend reading here. My simple EMA differential or simplified MACD crossing above the 0 line and then right back down, which it does right here. And so as of the open for 7:28 GMT, which is the timestamp I referenced in the PowerPoint slide here, the open for that 1 minute bar, we're going short at 151.26, putting the stop 20 pips above. And thereafter, we've just got a range of targets to shoot for. 30 pips, as I already mentioned, on the P1 or first lot of the 4-part order. And if you're wondering where we get our day trade objective from, I'll just go back to the daily chart. And I've got, on this Pro Real-Time chart, I've just got an automatically calculated ADR figure. And so for March 5th, it is 125 pips. So the day trade target is take the high for the day, subtract 125 pips. There's your target low for the day, because we know that more often than not, at least in a trending market, price will make its 5-day ADR figure, and sometimes it exceeds it quite handily in a strong trending market. And then we will take that increment, 125 pips multiplied by 2 from the high on the day in which the trade was executed. That will give us a swing trade target, which I already noted, and price has achieved that. And then the last thing that we'll do, although you have to switch into a regular candlestick view here, is trail the initial protective stop down to the highest of the last 3 daily bars, if that is specifically lower than where the stop already is on a day-by-day basis, and you can track this thing through as a position trade. If you have that patience, you can see a bigger trend and you don't mind the drawdowns or profit eroding moves on the retracements against it day by day. If you really want to hang in there for the longer term objective, which certainly has been worth it over the last 2 months on cable, you can do that. If you don't like position trading, don't use that particular scale out method. In any event, I hope this has given you at least a good sort of taste for what it's all about. We're really trying hard here to identify a clearly trending market, bypassing the corrective action on lower time frames, which can trigger a stop or result in drawdowns that it can be very nerve-wracking. So we do that by aligning a strong momentum reading, not just on 1 time frame, but 3, and then when we have it, drill down from there to a lower time frame for a really well-timed entry point with limited risk, and adopting a scaling out methodology from there. And I'm glad to say on pound USD it worked out really well this week, and nicely validating the near-term market forecast that we offered up for our members the day prior. And that's our look today at pound USD with the FXM Trend Trader methodology. And that takes us to the end of today's review. I hope it's been helpful and possibly stimulated some fresh thinking for your own trading. If you'd like to learn more about FXM Trend Trader, please do check out the URL at top, forexmentor.com/FXM Trend Trader. You can also follow us on Twitter, whether you're a member or not, where we post tweets on all of the pairs that we track in our daily market flow report every day, Monday to Friday, which is at FXM Trend Trader, or simply twitter.com/FXM Trend Trader. And 3 days a week, Mondays, Wednesdays, and Fridays, we also post chart extracts for all of the pairs that we post or tweet about. So please do check us out there. If you have any questions or comments, in the meantime, feel free to reach me via frank@forexmentor.com. That's my public email address, and I'd be glad to get back to you in due course. Thanks again for joining us. Have a great weekend, and we'll talk to you soon.